Hey guys, how are you? I'm really happy to have our guest Simon Dixon of Bank to the Future with us today. So a couple of things that we need to tell you about Simon. Simon was in the original Bitcoin conference. Not only was he in the original Bitcoin conference, he was a speaker at that conference. And in fact, he's got noteworthy for having published his Bank to the Future book referencing Bitcoin and its potential role in a post new financial order. Simon and I have actually met or interacted slightly quite early on in about 2009. Our paths have continued to cross. We shared a stage in Acapulco a couple of years back, talking at the Dollar Vigilante and Crypto Puco. So it's great to actually have him on, and he's certainly very well versed on crypto, Bitcoin particularly from the beginning, having been there. And we both love talking about the financial system and its great frailties. Simon, welcome and thank you for agreeing to come on.
Yeah, thanks for having me. We keep crossing paths. I'm glad that we finally managed to do this for over a decade now. So.
Indeed, 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 indeed. First, I suppose it's problem, reaction, and solution from me always. We need to talk about where we are now. I like guests to sort of, in their own phrase, we're sort of in the tail end of the initial wave of CV19, all tenuously awaiting wave 2 in the Northern Hemisphere, no doubt. But macroeconomically, Simon, give us your hypothesis. Banking system, debt system, how do you see it all, and how's it playing out, and what's the next dominoes to drop?
Sure, yeah. So I'm more of a macro guy, and we have these micro events that catalyze the weaknesses in the macro systemic, the systemic risks in the system. And so my whole thing is I've been working on this for about 20 years when I started studying economics. And I've been a critic of the banking system for three main reasons. One, because when you deposit your money with a bank, the bank becomes the legal owner of your money, and that has consequences. The second, because when they become the legal owner of your money, they can spend it as they choose and use it as collateral to stimulate the markets that they think they should be redirecting everyone's money to. And thirdly, because it is actually created as debt every time a loan is issued through the private banking sector. So banks were actually the inventors of digital currency. They created a digital representation of the government's currency, which was cash and coins. Banks create all the digital currency, and that has risks in creating what I call the world's largest regulated Ponzi scheme, which is fiat money. And so when I wanted to actually try and create a bank, where we originally wanted to create a company called Bank to the Future, and we went to the regulators and said, we want to create a bank where users can own their own money. We can only direct the flow of money if they choose to move it to an investment account. And we can't actually rehypothecate and create money every time a loan is issued. And they said, exactly. And they said that's not possible. You have to hire a CEO that's got experience rehypothecating through a bank. You have to step down as CEO, and you have to leverage. Otherwise, you're not a bank. So that's when we discovered Bitcoin. And I went to speak at the first Bitcoin conference. And I was publishing my book at the time, so included Bitcoin, and then that went on to be. So anyway, where are we now? I think we're at the end of a debt cycle in a systemically risky system, whereby individuals are all maxed out on their mortgage and credit card and student debt. Companies are all maxed out on their cheap debt that they've been using to push up the stock markets. And governments are all maxed out on their debt, and so therefore they're using the balance sheet of the central bank in order to find a new market for their debt. And we are in what I think is coming next. We are in the Great Depression of 2020. It will be referred to that from 2023 probably in the history books. And we are in a situation which has exposed the weaknesses of the financial system, not yet, but I think it's all to come. And we will enter, I believe, a Bretton Woods style monetary renegotiation in the
Yeah.
next 2 to 3 years.
And how far do you think the same actors that perpetuated this extended cycle of fraud, scam, Ponzi scheme, how far do you think they are again involved in the Mark II rebirthing Phoenix design elements? So are we just going to carry over the same criminality, just start a clean slate and play the same game, where the same guys being, it's kind of the monopoly with the same guys being the banker? Or how much really libertarian, really new, with some of those features that you were highlighting? In other words, an asset remains your asset, it just other people can custodian it for you. It doesn't get leveraged on the bank's behalf, etc., etc. What's your take on what will really be new? And I'm not talking about, okay, it'll be electronic and it'll be fast and those things. That's technological refinements and generational. I'm talking about the integrity of the people and the system involved. Are we really got genuine hope that we're not just going to rinse and repeat, just with, rhyming very closely, but okay, it's now done on the internet, it's a bit quicker, but it's going to have most of those same corruptible features in?
Yeah. So I think we're moving to a two-tiered economy, and one is a system that exists outside of the financial system, which is mainly driven by Bitcoin and innovation around that. And that will be competing with a system that in the next monetary renegotiation won't be wash, rinse, repeat. It will be worse than what we have today. What they're going to do is, I believe that the big threat for retail banks actually comes from central banks.
Yeah.
And I believe that the central banks are actually going to issue a central bank digital currency. And rather than banks being bailed out by taxpayers or bailed in by depositors, or anything that we saw in 2008, rehypothecate and restructure, I think we're going to see the central bank say, well, we'll let that bank go bust. We don't have the deposit insurance because that's another Ponzi scheme. We don't have enough coverage for all the deposits that we claim to insure. And therefore, what we will do is we will create a new central bank digital currency. And the way that you can get that central bank digital currency is it will be proportioned to the amount of you have in your bank account. So we'll let the bank go bust. They can auction off all the debt and it can go into the market. We'll make sure you don't lose your deposit because we'll give you a central bank digital currency. We'll also give you some free helicopter money as a stimulus. But you have to download this app and you have to meet all of our terms and conditions on the way in. And those terms and conditions will be some of the biggest infringements upon personal sovereignty freedom that you've ever seen. And now your central bank digital currency will be connected to your passport. At least with fractional reserve banking, while it has a debt-based Ponzi scheme, it was one step removed from government control. Now you're going to have automated tax collection, policies implemented and programmed into the currencies, compulsory vaccinations wherever the government wants this to go for you to be able to get on a plane. And if not, your wallet and your passport will be switched off.
I love that, and that you've actually echoed a lot of what I see. There's an escalation of autocratic behavior by control structures. And they're going to seize the opportunity of the technology to tighten that. I absolutely concur with that. And I've actually spoken of the retail banking sector actually being the lizard's tail that actually doesn't make it into the next realm. It's sacrificed. And that's almost like it'll be a sacrificial offering to us. Hey, as central bankers, these guys have had their way with you too long. This time it's going to be different. Hope and change, new system. We're going to go direct to you in terms of taxation will be almost direct, taken as it's arrived. They'll take their cut, and you'll have to fill in paperwork to claim back against that income any expenses. So it'll be front end loaded, and they're going to make it feel like we got the bad guys in the end. We're not allowed this to happen. Branch networks largely folding. I don't know if you've noticed in America, there's huge branch network property portfolios being put up for sale. Also in South Africa, as someone who travels a lot, I can tell you the banks are in terminal decline. They're selling off, and that's not specific to the corruption or that particular currency. They've always been quite robust and quite first world, even during difficult times. And I'm just all the places I'm seeing, retail banking probably must be one of the worst equities to hold and own. And it's almost like they're being bled out. Everybody speaks about Deutsche Bank and all of them, but I just don't think that we're going to see that many survivors. There might be some form of investment banking function because capital raise and various, but I think that's also going to in time go on blockchain, and maybe the decentralized finance aspect will start to cover some of that. But there's going to still need to be, it's a bit more complex. There's still some skill sets in that rather than doing what most people do, writing checks and sending money, which is pretty straightforward and can be done on the blockchain. So yeah, I totally concur. So that was the dark side. Give us the good news. Do you think Bitcoin, and this is where I might stray or deviate or just hold up a devil's advocate role, do you really think Bitcoin, given that there was an NSA paper written in 1996, is going to serve? Because remember, I see these people as control structures. The best way to enslave people is to also control the opposition as well. So you actually have a hand in each puppet, in the same way people are going to be going dilly for Trump versus Biden. They both, the one shepherds the masses into the other, and I have a feeling, just as an electoral visit, that Trump will get a second term, and that the Democrats are just virtually unelectable, not because Trump is great, but just because of all this law and order. Americans like law and order. So this sort of BLM thing, it's kind of just hurting a Trump victory, and it's the lesser of evils, but in actual fact, it's part of the same bird, the left wing and the right wing element. Is Bitcoin truly going to be that independent, given that 96 NSA paper that described what is needed and very much seems to sound like Bitcoin? Some people have pointed at the code in Bitcoin. It's almost AI generated. It was so flawless. Where do you stand on those things? Because in essence, you're a believer. You use the word belief. I believe Bitcoin is independent, free from government money. If it was, and it is a true rival to a Fed coin and a central bank coin, why can't they then crush it? In other words, it's just served a role as training the early adopters into blockchain theory. And now, thank you for what you've done. You were the first, but rarely is the first the best. Da 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 da. Here's our solution. Boom, and they enforce it and they close it out, or they force it into a black market currency that no one's meant to earn. What's your take on that? If you think Bitcoin is the better half?
Yeah, so Bitcoin gives you the ability to own your own money. Now, they can't actually change that. They can make it difficult. They can make it whereby it's illegal to own in a particular jurisdiction, is one of the threats. The second thing is it allows you to actually spend your money peer to peer. The reason that's important is because, ever since 9/11, we've had a general more and more control over how you can actually spend your money. And then when most people don't care because they live month to month on credit card. So they don't experience the pain points in actually trying to send your money. But when you send money at a bank, once you've got a balance, above the poverty line or above the debt line, which obviously our system has driven 90% of the world into, then you actually realize how hard it is to actually spend your money. The only solution to that, because I run a financial institution, Bank to the Future, we have to adhere to anti-money laundering laws, or otherwise I would go to prison. And so we know that where the direction is headed of what you need to do every time someone transfers money.
And it's tightening, isn't it? And it's getting more.
It's getting worse. And COVID is just another reason. We had 9/11 as a reason. And then COVID is another reason to exercise more and more control over that. And really, let's not kid ourselves. This is about tax collection and
Yes.
control. This is not about
Yes.
preventing a virus or preventing terrorism. This is about tax collection and control. There might be some of that as a side effect, but this is really what it's about.
If I can jump in, there was a segue, and I was watching some of your material and other appearances in preparation for our chat. There was an interesting segue with a chat you had with Richard Hart not so long ago, and I enjoyed that video. Well done to both of you. And you were just, he was making the point that a piece of paper that's had to be filled in, there's actually, someone ran the stats on all this paperwork. It hasn't captured a money launderer or done anything. He called it essentially security theatre, much like the TSA groping your 14-year-old daughter when she's going through security on an international flight, which is also, as you point out, the 9/11 events that have each led to a ratcheting up on our freedoms. And CV19 is, for me, 9/11 Mark II with a biotech edge on it as before. But sorry to just cut your flow off there, but that was really, really interesting. And these measures actually don't do what they purported to do. And as you correctly assert, are almost invariably taxation dragnet fishing.
Yeah, and then the other thing that can't be actually changed with Bitcoin is the money supply. So um, those what can governments actually do if they wanted to throttle those and choke those? So I recently did an interview on my YouTube channel with Jim Rogers, and he believed Bitcoin will go to zero because governments own the guns, was his argument. As soon as Bitcoin succeeds, government will shoot the guns, and then Bitcoin goes to zero. Is kind of his philosophy. So there is a school of thought that people think that if Bitcoin does succeed to a higher level, then that will be its downfall as well.
Yeah.
And so the way that I look at that is I look at the macro trends. So I live in a little island called Isle of Man. In Isle of Man, they were actually the first government in the world to try and support the Bitcoin industry because they saw growth potential and job potential. They did the same with the gaming industry. The world didn't want these strange online gambling companies. So Isle of Man puts together a regulatory structure and makes a home for poker stars, you can see behind me. They wanted to do the same for Bitcoin. The issue was that when they did that, the Bank of England, when they did the press release, the Bank of England contacted them and told them, we will remove clearing to your banking system because they use the Manx pound, which is pegged to the British pound.
Yeah.
And so at that time, they had to take that threat pretty seriously, and nothing really materialized there. But they do have their own version. They have the Manx paper pound, so they print their own paper currency. And really, to be independent of the Bank of England, the technology now exists. They could just peg a digital currency to that. But the point is that there are competing countries in this world, and therefore one person's downfall is another country's opportunity. So, we saw that with Bulgaria, for example. Bulgaria confiscated 200,000 Bitcoin from a criminal enterprise, allegedly. Interestingly, when the Bitcoins went into the government control, they disappeared somehow. But the value of those 200,000 Bitcoins was actually superseded the national debt of Bulgaria. And so for that reason, I believe that governments and central banks have an equal incentive to own Bitcoin as people do. And so because anyone can own Bitcoin and anyone can spend Bitcoin and the supply can never be changed, I think you're going to start to see if one country, like we saw it in China. I was in Shanghai. I used to live in Hong Kong, but I was in Shanghai when China's had this interesting relationship with Bitcoin. They released in 2013 on national TV. A national TV in China means only the government says what gets on.
Yes.
And they released the first Bitcoin documentaries on national TV in China in 2013. The reason I think they did that is because they were starting to actually plan what is their plan for actually becoming less dependent upon the dollar and destabilizing dollar as a world reserve currency. Now, when you're in trade wars and China's releasing their central bank digital currency, it's already out there, it's already being used. and you're in, political negotiations with countries like US and trade wars, Bitcoin can become a tool that governments and central banks can actually use in order to try and gain and rejig the financial system in a direction they want to go. And so I believe that there's going to be countrywide and central bank wide FOMO at some stage into Bitcoin because they're using it. So, if I was a country like going through hyperinflation right now, I would create my own central bank digital currency. I would try and re-stimulate the economy. I would do everything that they're trying to do. But I'd also use Bitcoin as reserves and make an asymmetric bet where I redivert some of my country's electricity to mining Bitcoin. Because maybe your currency is useless, no one will accept it anymore. But you can mine some Bitcoins, get currency, hard money that people actually will exchange for different currencies. And you can actually become an experiment for what might be the next biggest growth story that comes out of a systemic risk event. And I
Yeah.
think some countries and central banks would take that bet.
Yeah.
And so this is why I think we'll have countrywide FOMO competition amongst competing forces. And if I were a small central bank, that would certainly be a bet that I would take right now, and I'd be the first to announce it.
And I think the game there is to maybe announce it, but very quietly, or to do it silently, covertly, sort of almost dark state intelligence wise, whilst talking smack about it on the front end, because governments are very good at dual speak. Oh, we must watch this, pedophile, gun runner, hitman, all the usual cliche nonsense, whilst actually mining it and doing it. That could be quite conceivable. And just to talk to support your narrative, which is something again we've gone very similar lines in terms of our forward-looking scenario. Don't forget we have the Swiss National Bank that has essentially become a hedge fund and is buying Apple stock and a variety of other very high volatility, high beta assets that central banks shouldn't really be owned. These are securities in essence. So they become equity traders for their populace. It's not a very big step to say, well, how about a smidgen of Bitcoin on the side there, given that we're in a currency proliferation game? Because the Swiss themselves they've got the weak euro, they've got a lot of banking and currency coming in from the euro wanting francs. They've had to have exceedingly low interest rates as a result because there's been repeated Swiss franc collapses. We've traded that as FX traders from the very original Greek crisis right the way through to the peg fail. And as a result, they have a property boom, which they can't control. So their monetary policy is completely neutered. They should and might already be doing this and just not discussing it. Because if they're openly on record as owning Apple shares, as I say, these are very highly volatile instruments and pretty speculative. Tech churns cycle a lot quicker than manufacturing. I think your hypothesis is well supported by what's going on around in the market already.
Yeah. So your original question is can it be corrupted? Well,
Yes.
every market is manipulated. In Bitcoin is another market that can be manipulated. There's no the short term. Technicals is where you're the market sniper. You're the one with the charts. I haven't traded for an awful long time since I worked at the investment bank. But I do believe that the long-term fundamentals of the world's scarcest digital asset are harder to manipulate than even gold, where you don't actually fully know the supply long term. Certainly short term, you can do whatever you want with it. It's a liquid market, nowhere near as liquid as gold. And It's subject to all the same market forces and manipulations. But the one thing that is very, very, very hard to change is the supply of Bitcoin. The main criticisms of Bitcoin are governments globally will all make it illegal. I don't think you'll get that kind of coordination. I think you'll get countrywide politics and disputes and therefore making it more valuable. Black market in some countries, more valuable in other countries. Just like you saw with the gold being made illegal in the last Great Depression. And Then the other criticism is quantum computing. Yeah, if quantum computing happens, it will take down the banking system, it will take down the internet, it will take down everything that depends upon cryptography. And so therefore, that's something that's a threat. That's where you do want gold.
Yeah.
And people, I find this very interesting that people, and the other, sorry, is just so I don't trail off too far. I'll go back into the gold because I think that's an interesting conversation, Bitcoin and gold. And the other is what's called a 51% attack, which is where you can gain enough mining power to actually take over the network and actually, do some shenanigans to take down the network. The cost of doing, and this is what differentiates Bitcoin from anything else, the cost to achieving that for a very short period of time, I believe, has now reached the stage where there's no government incentive. Even the most deep pocketed quantitative ease funded governments in the world do not have the ability to 51% attack Bitcoin at this stage, which means that the supply will never change unless the entire Bitcoin consensus mechanism wants to change the supply, which is a value that's so high on Bitcoiners that I don't think it can ever happen. So those are the main threats. That's why it is risky. And that's what makes it a speculative store of value, because those things could, in theory, happen. But I believe that game theory will stop it from happening.
You have addressed threats, but in the question that I originally asked is, was it originally designed to be part of the replacement mechanism by the same people that are currently running the banking systems and have done so for their own benefit so flagrantly and at everybody else's cost, while running a fiat devaluation scheme where all the people that own the assets become wealthy and everyone else is on a greased pole? That was the question. And was it dark state security, so stroke think creation? In other words, it was poisoned at birth to be the next mechanism of control. I think those other 3 points are very interesting and can be discussed, but I'm even going one level higher there, is who are the originators of the tent? I don't actually, we don't know facts. It's all speculation. We can all have an opinion and speculate, and it's not backed. But I'm not sure. I just accept that there's this Satoshi Nakamoto. I talk about fairy tales for adults. And a lot of people, they direct you with, it's kind of becomes like a who shot JR. Who's Satoshi Nakamoto? It's drama for people, for people that want gossip. I don't think there is one altruistic individual that birthed this entire thing, stayed 100% anonymous, left all this money on the table, all the awards, all the credit, and disappeared into the ether, never to be heard or seen again. I don't know how far people buy into that, various degrees. Some people are just Satoshi. They talk about it. It's Satoshi. It's like godlike elements. And this is people that want to be ruled. They have to see this divinity, this greatest altruistic, absolute divinity. And I think that's a little bit of a mistake. Everybody is human. And Craig Wright probably proves that in terms of some of how he's gone on. And he apparently was involved very early. What is it? Is it because also on your Richard Hart chat, just to throw another pics to finish making the point and letting be so that you can respond. A lot of the major original people are 1% or less. And that's in his statement, banks and major institutions are already probably some of the biggest holders. Not that that's necessarily a bad thing for rats and mice like you and I to be holders in that environment, because it almost secures its tenor for the next cycle. But what was the intent from inception? Is it dark state from inception? The NSA.
Okay, well, I mean, I can tell you my experience, having been a part of the community since it was about 40 to 100 people. And when I spoke at the first Bitcoin conference in Prague, it was a bunch of people that were split into two camps, activists and technologists. And it was a cypherpunk movement from everything that I've seen from the beginning. And the conversations we were having is how you can allow people to transact peer-to-peer without any government control in the middle. Now, the technology to do that just happened to be created by CIA and NSA because cryptography came from these types of places. And I think some people, and they're quite rightly, it's quite right to question everything. But all I saw from the very beginning was just a bunch of people that were trying to create something that could actually work outside of the financial system. And yes, Bitcoin has its upsides and downsides. One of the downsides is that many people started using it for uncensorable transactions, but it turns out there's an immutable record of every transaction you got on a blockchain. And there are companies that are analyzing those transactions, doing chain analysis, as it were, so that they can actually exercise their next level of control. I'll give you an example. When I purchased my house, all of the bit when I needed to actually, because the person that wanted to buy the house wanted to accept fiat currency, I had to clear it through a banking system. And I had to disclose to the bank that these were the proceeds of a Bitcoin sale in order to get that transaction through. And it took me about 9 months to try and prove to them that these weren't the proceeds of crime. And that involved a forensic investigation on proving that these Bitcoins didn't come from something like the Silk Road or something like that. But I could very easily, and then by using the blockchain, I had to attach my identity with the bank to my actual transactions and show that the funds that I were using to purchase this house were not from illicit proceeds. And so really, you're not going to get away from the legal challenges of the world right now, especially when you're interacting in the fiat system. These are just, but what can't stop is that I'm very confident that we will only ever have 21 million Bitcoin, no matter how it was coded and no matter who started it. I'm very confident that if someone wants to accept Bitcoin, I can send my Bitcoin to them, and that nothing's going to interfere in the middle in that transaction. Now, if I move it to fiat, then that's going to be a different story. But yeah, the origins of it is I don't see any evidence from that. I believe Satoshi Nakamoto is a group of people. After the first Bitcoin conference, I went to a hackathon afterwards where some of the early Bitcoin developers, the first person that introduced me to Bitcoin, a guy called Johnny Bitcoin on Twitter, I don't think he's there anymore, but he actually moved out of his house and sold his house to put all of it into Bitcoin and moved into a squat in London with some of the people that were working on the original Bitcoin core code. And I went to that, and then I went to the Prague conference. And after the conference, you had to get several encrypted messages, codes to find the location of the hackathon. You ended up in this crack den in Prague, it was some building. You had to do a secret knock. I bought a Mars bar for 1 Bitcoin in order to get entrance. And there was a bunch of people that were, coding there with hoodies and anonymous masks and stuff like that take their privacy really seriously. I do believe that the CIA and the NSA know exactly who Satoshi Nakamoto is. I don't believe that you can keep yourself private from such forces, but I don't believe it was them themselves.
Okay. Yeah, that's great. I value your comments on that. And as you say, we can both only really speculate, and maybe these things will come out more in the wash as time moves on. What about a criticism as someone who's probably in the Bitcoin maximalist camp, but is open to see new ideas and did buy, I think you said, some Ethereum, but what about the criticism for Bitcoin? And this maybe makes a case for a security coin like Monero is, I hire a hitman to shoot Joe Schmo, and then I send that the hitman then sends you the Bitcoin I paid him to you when he's buying some of your services, and that this element of being able to know the intent of what's happened, you are now getting the equivalent of a banknote where the previous person's name is written on it and the purpose of what he purchased and did with it. And here's suddenly now this tarnished event where someone has done something dastardly that isn't recorded in the current world cash system, and with that coin, and now you actually have almost tarnished Bitcoin, and that's to be totally, this is the Monero argument, fungible. Every coin has to be, by definition, have a proper privacy based element. Otherwise, one Bitcoin could be better than another, or a strand of funding could be tarnished through cause of use. Let's say some really dastardly deed. Why are you not aggressively a security coin fan that is active? So if you can deal with that one.
Yeah, sure. So I'm empathic to that argument that given in light of the trends that we talked about when we first started this conversation, that privacy is an important part of achieving sound money. And Bitcoin is what I consider. So for me, it's about, I believe that Bitcoin is the world's best shot we have at achieving a sound money. That's my belief. That's my thesis. I think it's got the right mix to actually exist in the world where it doesn't actually get completely boycotted and shut down in terms of making sure that every on-ramp and off-ramp is closed down.
But that smacks of compromise. It smacks of compromise. That means it's accepting a certain amount of, as you say, people can even find people's net worths potentially if they have wallets and they do enough research. It's too open source. I think I'm seeing the strand you're going. You need to keep governments on board, not slamming it down. If instead of Bitcoin it was Monero and it's totally private and they're all going to crap the bed because people are going to get away with not paying as much tax. Meanwhile, it's not about hitmen being hired. Most people don't do that. But it does smack of compromise, and that means that element isn't being dealt with properly. So I'm just putting a bit more pressure on you.
Yeah, so you said that I'm a Bitcoin maximalist. I'm a Bitcoin maximalist in the sense that I believe that this is the only cryptocurrency that can ever achieve sound money in the world and make that type of impact. But Bitcoin doesn't solve every problem. The reason that Monero exists is because if I were committing crime, I would not try and use Bitcoin as a currency. I think it's a really bad idea to use Bitcoin for crime.
What if you just don't want everybody knowing all your stuff? I mean, without any criminal intent. Surely there's a bunch of people, I feel that way.
Exactly, but the way you maintain privacy in Bitcoin is by not putting all of your wealth in one wallet address and using multiple addresses to actually manage your finances, and use a new wallet address for every single transaction so that you can maintain the level of privacy that you want in your financial affairs in Bitcoin. But the Monero is privacy centric, and it is designed with that use case in mind. Now, what that means is that it fulfills the complete privacy goal. Sorry, I'm not technically competent enough to say whether that is actually fulfilled or not, but from everything I know and the people that I know, privacy is much, much tighter in Monero. And so therefore it attracts a certain use case. And privacy is important. It's not criminal intent. It just means that you want to privately transact. And there's many, many reasons why you would want to privately transact, especially if you're in the media industry, if you're, whatever. There's so many different use cases for privacy that the world should have. And I think it's a human right and a form of freedom of speech as well. So Monero can get about solving that use case, but the challenge with that is it's going against a government goal, and therefore it will be every regulated exchange will not be able to make a market in Monero, and central banks most likely won't own Monero. They might, and therefore it doesn't fulfill that use case, but it can still exist.
I think they may own Monero, and whilst denying that fact, for their own dark deeds, but yes, but certainly want to prevent you from having similar access to tools. Because one thing, just to add to this, that makes it particularly interesting is utility and use case. And one of the coins that seem to have gained, while might not have appreciated like an Ethereum alt has, Ethereum's been pretty strong in this second phase of alt. In fact, from a speculation and trading point, we've driven a lot of people there in this alt move. But Monero's usage has been one of the ones that has climbed highest. So in terms of, in the longer run, utility, so we get to this point where we're talking golden cash again in the crypto realm. gold being maybe now for making money and acquiring money. You could argue this last spell has been quite Ethereum friendly, has been the gold, whilst actually for the usage, we're actually seeing high, very high, all-time highs usage on Monero, which probably is showing that that need is quite an important need. And I'm just saying, Bitcoin, by wanting to be too much of everything to everybody, ends up being damned by everything, because as crypto expands, you're going to become more niched and special. It's kind of like being a half decent footballer. You get damned by being a utility player. You're not an outstanding striker. You're not an outstanding central defender or a midfielder. You can kind of do all things reasonably well, but you're not a specialist. And as we get more advanced and we organically grow into all the fields and elements, and there's far more money, becoming king in a more vertical or very deep area seems to be prudent. And it's almost, I'm not going to try to be all things to everything, but I'm going to be bloody good at doing one thing. And at the end of the day, the brain surgeon earns more than the paramedic. Will Bitcoin end up being the paramedic of the medical field or the crypto field, while, say, Monero could be the brain surgeon in that area?
Yeah. So, I don't know how advanced your audience are and how technical and geeky we want to get, but the way that I see this is playing out is that Bitcoin is fulfilling the use case of digital gold. It's becoming collateral that people use to access other types of financial products. Ethereum is really optimizing for the use case of not only decentralized money, but they're trying to help people have decentralized exchange, decentralized insurance, decentralized stable coins so that you can transact in fiat without actually having to go into fiat. And that use case is the latest wall. The buzz phrase is DeFi at the moment. Monero is optimizing for privacy, and therefore you're getting these different markets. But it's not to say that in the future Bitcoin won't have different innovations whereby it can optimize through what's called different layers, whereby you can optimize for different use cases, and that's where the direction of Bitcoin is going with new innovation. But I think in terms of the macro conversation, I think that Bitcoin is our world's best shot at achieving sound money, and that's what makes me a Bitcoin maximalist for sound money. I think Ethereum has great traction for decentralizing lots of different financial products, and you can even take your Bitcoin, hold it as collateral in the Ethereum network, and then gain access to decentralized financial products, which I think is what a lot of people are doing. And then Monero is optimizing for the privacy. I do believe that this, in the future, it won't be allowed to trade on exchanges. And so therefore, that's why it's really important to have much of this DeFi innovation that we're having right now, where you can just go straight from not having to use fiat. You can take your Monero, you can lock it up, you can contract in a decentralized financial product on Ethereum. You can then take that into a stable coin so that you can transact in real world value. That can go in and out and off ramps into the regulated sphere when you need to do that through Bitcoin debit cards or crypto debit cards and stuff. And this entire ecosystem is starting to build around those different optimized use cases. But the foundation of it all is Bitcoin as being digital gold. And that, I guess, segues into the gold conversation.
Yeah.
But that's where I think that's where I think the optimization is. And then after that, you have thousands and thousands and thousands of speculations, which are, kind of like looking at penny stocks for can they actually achieve what they say they can achieve. And 99% won't achieve it. But because there's liquidity, you get all these pumps and dumps and crazy scams and all sorts of stuff in the crypto markets that confuses a lot of people. And really, I think that the real innovation where newbies need to focus is Bitcoin as digital gold, stable coins as an interesting mechanism for transacting, Ethereum as a decentralized finance protocol, and then Monero is taking the lead in the privacy side. But even those, I think the first point of call where people should look is understand Bitcoin, and then you can branch out.
Yeah, very good and common sense, and I also like the warning on shit coins and the propensity for pump and dump. I get approached all the time for various forms of manipulative attempts just by virtue of having a YouTube channel with a number of subscribers, and we're just not interested. But it makes me very clear how many quick money dark actors are out there for those sort of things. And my golden rule for most people is don't get engaged in coins outside the top 15, and they've got to have been in there for at least a year, because you also get high flyer coins that in their IPO generate a lot of cash, create a momentum cycle that can be in a bear market that create quite a bit of hype, and they can hold themselves there for a while. But if there's anything really going and they're burning cash, after a while they won't be there. And we've had a lot of shooting stars. In fact, I probably have to.
I go a step further. I wouldn't touch the top 15. I'd understand Bitcoin. I'd transact in Bitcoin, and then if you really want to go a little bit further, figure out how to wrap some of your Bitcoin into Ethereum and play with DeFi a little bit. If you want to do something with privacy, then you can look at those privacy. But really focus on utility rather than actually, again, but that's not to say if you want to be a gambler and you want to, figure out how to get rich quick fast, then take, that we're not going to stop those trends. And our industry is full of opportunities. You will get wrecked. You will end up broke. You will lose all your money eventually if you continue like that. You might get lucky once or twice, but you're going to bet the whole house on something that just takes your whole wealth down. So if you want to play the gambling game, make sure it's less than 5% of your Bitcoin.
Oh, absolutely on that. And let me finish clarifying. When I said top 15 is a watch list, most of what I do in terms of calls is on Bitcoin itself and Ethereum. We've occasionally brought in like a Cardano and once or twice, but actually 85% within that 15% is in the top 3 or 4 tokens. So I concur there as well. That's awesome. You were going to go on a segue back into the real world gold earlier on, and I think now just to give you a break on the crypto side, owning actual physical gold, the metal we're talking about now, you were talking about that as also a good sensible thing. I think we're talking PMs because I have a slight bias to silver, but I think you should have a mix. So when you refer to gold, I think you're referring to the established precious metal bullion that you can hold. Take us down where you were going to go there. And while we're doing that, maybe just to, while you're talking, I'll actually share screen and we can bring up some charts as well. It will just liven up the display. I was going to start with that Barclays Bank. Let's allow us 1 second. Let's kill the banks and crap on them a little bit, shall we? European and this is UK bank, one we'd both know extremely well. Never really survived from the 2007-8 crash, and since this major collapse have been in this. You got a snapback rally, and then actually, in essence, we've seen various levels of support. The COVID-19 events seem to have actually seen long-standing support on many of them be taken out to the downside. Just a little bit of, I suppose it's TA and it's not your primary focus, I know that, but you were in an investment environment, getting a little bit of a return move, and then you're fizzling back down after that break. What's your fundamental take on the notion of this? I mean, is there any cause for any optimism here, or is this potentially, as we both were talking earlier, a sacrificial lamb that will be thrown to the masses as we listen to you and banks are dead and us the central bankers are coming direct?
I got a bit of latency when you were. What chart are we looking at?
We're looking at Barclays, the ordinary share, and I was just highlighting the big blue arrow here that I'll throw in the transgender pink line there with is the smashdown of the 07-08, where Barclays essentially was a £7.20 stock. It traded as low as 40p. You might remember they got the Qatari money to bail them out so that they didn't become ward of state in the UK, because Lloyd's, Royal Bank and the other Bank of Scotland all went into government hands at that time. And then the point I was highlighting is we had this sort of descending triangle type structure, and the COVID-19 in the pink box there saw us actually break and have a return move. We've actually run a support level that was around the 100, 120 levels. And we're now leaning on that critical level of £1 for Barclays stock. And I'm actually short it and continue to be short. What's the future for banks before we run you through to the gold charts?
Sure, yeah. So the fundamentals. So firstly, I really distrust the stock market at the moment. There's such a disconnect between economics and the markets. The Federal Reserve has decided that markets don't matter anymore, and that markets are not allowed to crash, and therefore they should always protect the value of stocks, and they should have stimulus packages for stocks now. And so, the value of assets is really a Federal Reserve driven market globally at the moment.
Yeah.
And so that's the first caveat. So we're not looking at fundamentals anymore. The smart money is still keeping their money in stocks because they know that we're not trading fundamentals, we're trading Federal Reserve actions.
Yes,
So
liquidity.
therefore the money is not exiting the market. So that's the first thing. But then when we drill down into a sector like banking, with banking, I think the important thing for people to understand is that I see a long-term trend that central banks are going to actually be attacking banks, and they're going to let those, if you've either got your bank deposits, you're going to end up with bank stock in the end if they decide to bail in. I don't think the government are going to bail out this time. And therefore, what you're looking for is essentially the stress test of when you're looking at the micro individual bank. So when we're going down to the minutia, like Barclays, you got to look at, well, what happened in 2008? Is it still government owned? Most of the central bank, most of the government bailed out the major clearing banks in the UK during 2008. I haven't really been following exactly what happened to those original packages. So then, is the government the individual shareholder? But also, what I'm looking at is because banks create money every time they issue a loan. They came up with a new idea leading up to 2008, which was sell it to your pension. And so, what
Yeah.
retail banks did in order to
Securitization, it's called.
exactly. So, in order to get around the stress tests and the compulsory reserve requirements, they also have their investment banks. The investment banks would take the debt, they would package it up, and they would sell it to your pension. And so, if the banks have successfully managed to offload all of those liabilities, there's a couple of things that are actually going to happen. So, the way that the banking system actually works because of that is essentially they get to take a one-way bet. They get to create the money when they issue the mortgage, and then they get to repackage it and they get to sell it to your pension if they don't like the risk. But if they do like the risk, they get obviously the ability to repossess the asset when you end up in a negative equity situation because you've locked down, your business isn't operating anymore, and therefore you're relying upon government dependency to pay your mortgage at the moment. And there is a lot of bad debt that's sat on these balance sheets. So banks are actually going to end up repossessing most of the world's real estate, I believe. They're going to end up with that on their balance sheet. But when we have a real estate correction, which I think we do have, probably when a lot of the PPP, the protection program loans, a lot of the policies that were implemented in COVID were around protecting people's income, but businesses were borrowing the money in the case of US with the condition that they have to keep all their staff employed until the end of October. Well, they've taken those loans, and if they don't lay off any of their staff by the end of October, they get to keep that free money. So a lot of businesses in America are keeping the free money, will be laying off their staff at the end of October, which means that then we start to feel the effect of those people living month to month, losing their income, not being able to service their mortgage, and therefore we're going to have a lot of that effect is still to come through, and that will end up with banks becoming asset rich through repossessions, but having a lot of bad debt that they need to write off, and then we get the central bank digital currencies. So really, When you're asking, the only choice you have is you're either a technical trader like you and your audience are, and you don't really care the reasons for these things because you're looking at the charts, or looking at the long-term fundamentals is 100% politics now because the markets do not exist. There is no connection between the economy and the markets, and you're just trading the Federal Reserve.
These look like bankruptcies in waiting for me. So many of them do, Deutsche Bank and many of the others. And I think you made some amazing points. Let's get you to gold, though, because that's why we're here. Why should someone have precious bullion? What's your phraseology? I mean, everybody knows my opinions pretty well. If we go, let's go to the gold futures chart. What's the benefit? How are you playing the precious metals? This is a monthly chart, by the way, and that's the gold futures. So this is the previous high in 11. And of course, we've made new highs since then. What's your comment on physical?
Yeah, so with the gold markets, there's a couple of ways of looking at it. As you point out, making the distinction, which is very wise, between actually owning gold and paper gold. Um, there is way more paper gold than there is gold, and so therefore that paper gold market is a very, very, a disaster waiting to happen at some stage as well. But owning actual gold is a very important thing. And why do people own gold? It's a store of value. Central banks use it as a store of value. People use it as a store of value. It's been used as a store of value for 5,000 years, and it's maintained its value. It's not designed to make you wealthy. And this is where it's kind of a distinction between what I call Bitcoin as a speculative store of value versus gold as an actual store of value. So if you've already generated your wealth or you want to preserve what you've got, then I think gold is a great way of doing that. And it's proven the test of time. If you want to actually become wealthy, I wouldn't suggest trading paper gold, although these trends are very interesting. That's where, in terms of wealth generation, you need to do something a bit more speculative. And when people are buying Bitcoin, they're essentially speculating because we went from about 40 people in a room when I first went to that Bitcoin conference to today, where pretty much wherever you go in the world, most people won't know what Bitcoin is, but everyone's heard of it.
Yeah.
And the vast majority of the world think it's a Ponzi scheme, a currency just for drug dealers, a scam, or something, along those lines.
I think that's changing, actually. You're characterizing for maybe 5 years ago. I think that is actually changing. But
Well,
you're
that's
right. I know
exactly
what
that.
you mean.
So every single year over the last 5 years, as you point out, more people realize it's not. And so the reason that there is wealth creation opportunity from my perspective in a speculative environment from Bitcoin is because you've got to wait for everyone to realize that it's not. Once it's not, it can become a medium of exchange. It can act like gold and it can become a store of value. But that's why I think gold and Bitcoin are actually a match made in heaven. Because gold is your store of value, Bitcoin is your speculative store of value, but most people can't store their own physical gold. So they either trade it in paper form, which is there's not enough gold to back all the paper gold, or they just store it in Switzerland and Singapore. And in a time of lockdown or financial turmoil, I don't trust custodians. I wouldn't hold my Bitcoin with anyone else. And therefore, if you're holding your Bitcoin if you're holding your gold in Switzerland and Singapore and you're in a lockdown and the world's gone to crap, I don't trust that you can get that Bitcoin. And that's the very time when you need your gold. Sorry, I keep saying Bitcoin and gold. That's the time when you need your gold. And that's when you want your Bitcoin because Bitcoin is very easy to store in your possession with no custodian. If the internet goes to shit, like everyone talks about, obviously Bitcoin's developed satellite and all sorts of stuff. But in that time when, if that's where Bitcoin and gold are just this match made in heaven. If you can have your physical gold and you can have your Bitcoin, you're prepared for anything.
Yeah. No, I agree with that. I actually do utilize an online internet custodian, but I also utilize physical. I think to have a mix of both. I think there's varying degrees of breakdown. Because there is a slight difference. I get to buy at spot with the custodian. I don't pay the VAT. I can collect. I can have reserve bars hypothecated, so that prevents hypothecation in my name with serial numbers. but it's still not the same as having it. If I buy it physically, especially if I'm buying silver, I'll have to pay the up to 21% VAT on it. I must pay it now, so I'm paying quite a bit more. There's slightly higher premiums to it on top of the VAT, but I think you need a bit of both. If we have a complete crash where the old rule of law all throughout the world goes and everybody seizes whatever possession is 90% of the law, only the physical survives that you have under your own personal control. I'm not sure that we go that far, and I'm prepared to take some risk with that. But it's not in paper, and it's named bars that are reserved. But you still,
So, Francis, the mistake I think people make here is they forecast a scenario and they say, I'm going to go 100% in that scenario.
yeah,
And so therefore they put all their money in gold or they put all their money in
yeah,
Bitcoin, saying,
yeah,
I think this is what the world's going to look like. The reality is we don't know what's coming next. It's all politics. We got to prepare for inflation, deflation, economic boom based upon Ponzi schemes and economic decline. And therefore, all you can do is have a number of scenarios and build a portfolio based upon preparing for certain scenarios and expecting to be wrong because you're not going to be right. If you believe that you put all your money in gold and the world's going to shit and the internet's going to go down and that might happen, but do you in the meantime when that doesn't happen, do you just be prepared for that scenario, or do you prepare for the fact that the government might actually figure out how to turn this Ponzi scheme for longer than you live?
yeah.
Or is gold going to be important if the internet goes down? Or if the internet never goes down, is Bitcoin going to give you a wealth generation opportunity that allows you to buy more gold than you ever imagined before if you just stayed in gold? And so this is why, betting on one scenario just because you believe that that's going to happen, one, it may happen and you may be right, but you might die before it actually happens. And so therefore you need to look at different scenarios and be prepared for those and be willing to be wrong. Otherwise,
On a number of them and still come out very good. You can even have a few of yours completely blow out where that allocation is lost entirely, but the others all come home and you're still going to be significantly better. I know it's popular for everyone to say, well, it's just an insurance policy. You don't build wealth out of gold. To actually say, well, I think you can. The key thing is wealth is actually a relative measure. It's going to be relative to greatly diminished dollars, greatly diminished pounds, etc., etc. And you just can be, it's kind of like an insurance policy, just be overweight. I don't see any reason to own debt instruments. I don't have a pension with bonds or anything in it. You just be overweight. Just be overweight in the key defense areas, and it will be a wealth making mechanism in whatever becomes the future money, for which we have yet to know. Even if we're all forced into Fed coin, and I think you can have equities in that. So I actually say gold and silver equities, and gold and silver physical that you hold. Gold and silver online that you reserve bars in your name and have the numbers for in a jurisdiction that's the strongest. I've gone for Singapore. I would say Switzerland probably going to be the next best. I don't fancy London, New York and Toronto, but they all might be fine, and they all might go down. And then Bitcoin will be a definite accelerant because it's a higher beta to gold, but nonetheless, you can make money out of all of them in whatever that future money will be. It's kind of like insuring your house, but over-insuring it for being burnt down. If you live in a 500,000 house, have a disproportionate position size in gold, and you've insured your house for 2 million if it gets burned down. Then in actual fact, you're almost praying for it to burn down, and your insurance pays out. But that 2 million is 2 million watts. That's the key thing. And that could have lost some buying power.
Yeah, if you want to pull up charts, I'm not going to ask you to do it now, but the charts, people should be thinking when they're looking at their charts, they should be pricing it in dollars, pricing it in gold, and pricing it in Bitcoin. Then that will give you a real picture of the world. And so if you actually are trying to figure out what is the price of the market, make sure you're actually doing the other things, which is not just pricing it in dollars, price it in gold and Bitcoin. Then you can start to get a true reflection of where the world.
Very valid comment. One we actually say. So I talk about personal wealth building, and I say, what's your silver ounce wealth? What's your gold ounce wealth? What's your Bitcoin and Ethereum wealth? Those are the four matrices, and I encourage people to actually measure them by all. For me, silver is the alt to Bitcoin to gold, and although they came first, and Ethereum to Bitcoin. And I say that those are primarily my two trading instruments in the crypto realm. As I say, that's 85% of the views I take. And that's the smartest. Interestingly, just on a commodity chart, just flexing while we're talking on the real world stuff, GSCI's Goldman Sachs Commodity Index, you probably already know that, but just for the viewers, and of course the Dow Jones Industrial. This is relative valuation. It's a bit grainy. I had to take a snapshot. We're in 2020, but this is the commodity index at the moment in valuation to the Dow. That's not the NASDAQ, by the way, which is on jet fuel, as you're probably aware. But that right there represents, and let me just use a better tool here, grab a square. That low right there is deep in the undervaluation zone that's accompanied the 60s, 70s major lows for commodities that saw the subsequent reaction. This is why we like charts, because whenever you get over pushed down to one side, you get a disproportionate and geometric overreaction to the other side. We've seen bull to bear cycles very much in Bitcoin as well, which you'll be super familiar with. But that's essentially your 80s gold boom that you get subsequently after being artificially, grossly, radically undervalued, is the phraseology of this particular news report. And we're actually back down in there right now. And we actually only had a half bull. Many people don't realize, technically, take some of the stress off you for talking, Simon, but we've actually only really had a half bull in the gold market on the last period, by my assessment. We never got the full bull. The QE came in. There was a lot of bailing out, and then I think there was some clear intervention of some sort, but we never got the full bull, which we probably deserved here, and we've gone right back into worse undervalued. And the interesting thing that I did as well that you'll appreciate is we took government stats for inflation, their CPI. That's the Bureau of Labor Statistics in America. So we work in gold, in dollar, and BLS stats. And we deflated the gold price by that since the 80s boom. And the bull market has barely started in precious metals. Then we took John Williams's shadow stats, which is actually, instead of flexing and varying the basket since 1982, the Ronald Reagan era, you actually have Ronald Reagan as base level at 100. And we used what the real inflation rate according to those original basket items that were in 1982. And you're actually facing double-digit inflation. Many people think there isn't inflation. There is actually huge inflation with real consistent stats. And one of the biggest lies is the continual adjusting and the inclusion of text and flat screen TVs. And I always refer back to Maslow's hierarchy of needs. We're having such a polarizing event. You're not going to be worrying about the cost of flat screen TVs. You're going to be worrying about food supply, roof over your head, and the basics, and in fact healthcare, and all those things, particularly if you take America, all of those things have been turbocharged, healthcare particularly, and in terms of inflationary measures. So we're at the foot of a bull here that is only really just started. For many people that think, oh damn, gold's made new highs, I've missed it. My response is you've missed nothing. Those charts are just beginning basing out. And in some senses, with a crypto chart, we're having, in our view, one of the biggest macro continuation patterns. Never in the history of Bitcoin have you had something of this scale. I'm just going to log this because this looks a little bit insane. This is the biggest single macro continuation pattern in our view technically. And I know this is not your field, but it'll give you some encouragement because it endorses your fundamental view. You've not had a continuation of that scale. That's gone from 17 Literally, we're in 2020, it's all but done. You're talking about the end of 17 to the end of 21 already. We've yet to have, in our view, the clear sign that it's broken out with real momentum. And this is going to be much larger volume. We're not seeing the volume yet. So we think we might drift off a bit, but when this breaks, and it's kind of gold and Bitcoin, silver and Ethereum as well, if you want to say that, cryptos and precious metals, they're almost both spring loaded to really truly move in the not too far off future. And this is why we're so excited for both, and we recommend people having both. And actually the correlation as an anti-fiat group has become so tied. I don't know if you found that and what comments you'd have on that, a little bit of a monologue there.
Yeah, I mean, and the truth about inflation is just everyone knows the truth about inflation just by looking at their own personal household.
Yes.
Everyone can feel it. The world is not what it used to be. And you got to work harder and harder and harder in order to maintain a similar level of standards. And the vast majority of the world can't actually meet their standard of living, so that they're going into a debt cycle.
Yeah.
And the debt cycle was never like this in the past. So everyone knows the truth. It doesn't matter what the manipulated numbers are saying. Just look at your own household and see how you feel.
And that's now on dual earning households often, where in the 70s and the 60s, you used to have just a single earner and you'd live and save and pay off a house in 10, 15 years. Now, most people, both parties are rolling into credit, and you have a dual income families, often with very low numbers of children as well. So you'd go from a couple with 3 kids in the 60s and 70s boomers to a couple with maybe no kids or one, both working and all getting further into credit card debt. I mean, tell me there's no inflation.
Yeah. And unfortunately, the world we live in today, because of this world's largest regulated Ponzi scheme, is you have two choices. One is that you just go deeper and deeper into debt, knowing that the money is going to be worth less in the future, and there might be a jubilee as this Ponzi scheme crashes, which is what the vast majority of the world are doing. Or you use speculation and use asset prices in order to actually beat the reality of inflation. And that's your only choices. You either are playing the debt game or you're playing the speculation game. And what most people are doing is that they're just sat in the middle, having the financial system speculate for them through their pension. And therefore they're getting wrecked because the financial institution does not have your best interest in mind. The financial institution is essentially if you leave your money at a bank, that is a speculation. That is a decision. You're speculating on the credit risk of the bank. Everyone is speculating. And unfortunately, you either have to learn how to speculate or someone's going to speculate for you. And I guarantee you, learning how to speculate is the only path to actually beating the debt cycle, because it's just the economy we live in today. I'd like to live in a different economy. I don't want to sit here having to do. I mean, I enjoy it, but you know what I mean. There's easier ways. There's easier things to do in life, but that's the reality of the world we live in today. So. That's why it's important to educate yourself on these things.
Beautifully put. You beautifully put. I think, end of cycle, you owe it to yourself to be managing and learning and taking control over your own money. Otherwise, as you say, you'll be stuffed with government debt, which is probably going to face a debt indemnity, in some words, forgiveness. And the uncanny thing about this is, unfortunately, given my propensity to believe that governments are getting ever more, we're in an autocratic cycle, not a freedom cycle. There's a ratcheting up of control tightness for tax extraction and due to the debt Ponzi scheme that's been created. I don't believe the individual actually will get debt jubileedom. I think it's going to be corporate and government to keep systemic things alive and reset the clock. Debt is a great way it's a great controlling instrument over people to keep them running on a treadmill. And I think you'll probably carry over negative Fed coins that will be netted off against any you earn and still be in a tertiary extracted type structure even post this. So people shouldn't gamble on the fact that they're going to get a free pass. here, because people, this is the thing that concerns me when we have debt jubilee type discussions. Some people think then, what the heck, I'm going to go for it. Everything's all going to go to crap. We'll all go to crap together and they'll have to cut me some slack. What they're going to do, kill me. And actually, they shouldn't do that. They should get cash generative, get cash positive in cash flow, and they should be net saving in Bitcoin, gold, silver, and Ethereum. And they should live well within their means during this time. There's a window of opportunity. If they build a significant position with what's coming, the government will do the rest for you to make sure that those things appreciate immensely in whatever money they end up issuing later, because they're going to Ponzi scheme this. We had 5 trillion in 3 months. This year. That was more than the QE in 2007 and 8 in 5 years. So the hockey stick nature of what's going on is exponential. How do you agree with that?
Yeah, I mean, the debt jubilee situation, people always think of debt as in terms of if they're in debt, they think of their personal circumstance. But you have to remember, every debt product has somebody else on the other side. So this wrecks savers, this wrecks investors, and the impact it will have on the financial market and you is, this is not something that won't affect you. So it's not really a good approach, but I understand why people can't get out of that debt cycle, because it's you did everything you were told to do. You started by doing your degree, and then that put you in the debt cycle. And then you just could never recover from that.
By the time you realize the game, you're too deep in and you've been put on the wrong side of a compound interest equation. And it really takes quite some toil to turn it around, and you have to find a way to add value and generate cash flow. Pensions, you've mentioned them a couple of times, and we both seem to be of the view that they largely are almost destroyed. And that post whatever Bretton Woods moment Mark II that we get, in other words, the flippening into the new financial system. I mean, everyone's wanting to know, when is reset happening? And I'm trying to explain that there is no one single event. It's not like you wake up and the sky's blue and you wake up the next day and it's red. Reset is already begun happening. We've seen all sorts of systemic failures. We've seen repo rates. These are all symptomatic of a camel that is exhausted and his spine is virtually going to break. If you're asking when that final straw falls that does the snap event, it's actually almost moot point. You should be preparing for reset because it's apparent and it's occurring. Pensions are one of those. If we just do a social speculation on our side of interest, and neither of us knows, but just for fun and the viewers enjoy this, UBI to replace bankrupted pensions. Everybody gets some money because they're born, for no other reason, and then government starts stipulating criteria for you to receive it. You mentioned the vaccine and the loss of freedom of movement if you don't comply, and loss of your UBI, which will be a substitute income for a failed pension system if you're a pensioner, an income for all your... How do you see this whole thing, the social breakdown?
Well, so the first thing to understand about pensions, again, you break it, private pensions, government pensions, different things, different products within that. But the pensions were never meant as, for you to fully rely upon your pension. Everyone should always, if you've got your 401k, if you're in the US, or you've got your, your company pension scheme, wherever you are in the world, I believe everyone should always have their own personal plan B as well. And you shouldn't rely upon a financial institution to look after you. You should be hedging those risks, and that's why you should own things like physical gold. You should own Bitcoin, and you should also have your self-invested personal pension or your IRA or whatever it is in your country. And so these are really important things. But the problem is that the demographics. I think you're speaking with Real Vision. He's Raul really knows, he can create some really good content on the demographic side. But the demographics means that there has to be a complete reform in these structures. And so you really can't rely upon these things. I mean, it's a petrifying state to be in, relying upon these stocks and bonds that are put into these pensions without a plan B. And that's why one of the things that I'm working on, and we're working on at Bank to the Future right now, is actually how you can have that alternative retirement plan. And I believe that everyone needs to have one, because the traditional pensions, While we're getting innovation in the hedge fund industry at the moment, where hedge funds reserved just for sophisticated high net worth. And Paul Tudor Jones recently said he's allocating 1 to 2% of his hedge fund to Bitcoin. And if that actually produces a matrix that other hedge funds can't catch up with, because we get some of these exponential growth cycles, then the entire hedge fund industry needs to adjust to it. But the private pension market is not going to start looking at these scenarios. They're not think of your pension as maintenance of the status quo.
Yeah.
They won't be prepared for anything else but maintenance of the status quo. And so if you happen to retire at the time when the status quo is maintained, and this Ponzi scheme has been rehypothecated and re-engineered, and it still get the same, but then what if you retire when that's not you retire at the wrong time, and that's where you need a plan B.
Yeah, no, absolutely agree. And I think Real Vision did a good one on pensions totally being they're just not going to survive this cycle because of demographics, also because of the required return, insufficiently funded, various things. We've got a lot of government pensions that are government backed, which private people don't have the benefit of. In other words, the government have made a commitment to pay a certain salaries, and some of them are gold plated. But I think there's even scope for them to renege on that. In other words, I think there's going to be a lot of government reneging. And I was also interested to hear you think like me. Many people think they're safe because they've got bank balances within the deposit regulatory value. I think it's 80k in GBP. It's probably 100,000 euro in Euroland. I'm not too sure of the dollar amounts. It's possibly $100,000, maybe 150. Restate your view on bank deposit safety within those levels that they've discussed. Do you think they'll stand by them?
Sure. I mean, bank deposit insurance schemes, came out of the last Great Depression. We have bank holidays right now because during the last depression, they had to just close banks to stop people withdrawing cash out of those banks. They reformed and they came back with bank deposit in schemes. Now, they were designed for a few banks going bust and you being able to have insurance on your deposits. They weren't designed for systemic risk in the entire system. They rely upon, there's actuaries that work in the insurance industry that calculates the amount that you would actually need in order to meet obligations under all sorts of different models. But the model that they haven't got is, what if you get systemic risk in the entire financial system? That is when there is deposit insurance doesn't apply then. That's when you get monetary reform. That's when you get banking reform. And that's when you lose your privacy, because the new form of money is going to be horrific compared to the existing form of money. So you can rely upon your those insurance if for one bank, for two banks, for the banking system having systemic risk, they're not covered. You're not covered. There is risk in there. There is credit risk in money at a bank.
Yeah. In other words, the people are thinking they just don't have the inflows to do that. And then even if government's saying they stand behind it, all they'll do is proliferate on such a scale that they'll inflate it away if they ever do have to do it. So the quantitative easing, if they actually stood by it, or they'll renege entirely. And it's not being funded. As you say, that used to be an entire banking...
You have to pay some way. This either is going to be you paying through tax, which will be funded through inflation, which is what we've been doing, or it's going to be bail-in, in which case you're going to pay with your deposits. And then if they can't meet the insurance liability because it's systemic, then they're going to be doing it through QE, through inflation. Or there's going to be a complete financial reform, in which case you're going to get a central bank digital currency. By the way, it doesn't need to be blockchain based. It's just going to be a digital ledger. There's no blockchain needed for that. That digital ledger is going to come with terms and conditions, and those terms and conditions are going to be connected to you taking away your personal freedoms, your personal liberties, your sovereignty in exchange for the drug money that they're going to give you.
Yeah. dark times if that happens. Simon, tell us a little bit about what you're doing and your message and how people can engage with you and some of the ideas that you have for the future.
Sure. So I've documented most of my history on and off through my YouTube channel, Simon Dixon, which is it's got my first talk in Bitcoin. I created a video, interestingly, that it had very few views. It was uploaded to my channel in 2011, and it was called The Great Depression of 2020. And suddenly that new video came to life, and that got me creating more and more content on YouTube. Um, I'm an investor in many of the major companies in the Bitcoin industry, from like over 100 different companies. And at Bank to the Future, you can build a portfolio in equity of crypto companies. And my new project that I'm really excited about is next month I'll be releasing a video series that I've been working on for about 3 months. The editing's working at the moment, and it's a 4-part free video series where I'm going to take $1 million of my personal savings and invest it during the Great Depression of 2020, and show you exactly what I'm doing. From that, we're going to actually be working with some people that want to build a Bitcoin-centric retirement plan. But you can join along on the free video series. Really, really excited about bringing that to the market, because I just really believe that more and more people need to look at this stuff. And although I'm doing it with $1 million of my personal savings, you could do that with $100, $1,000, or even nothing. You could do it with just a percentage of your income. Obviously, you'd have to have an income. Can't help you if you haven't got a job at the moment, unfortunately, which is a lot of people's scenario in debt situation. But I'll be sharing exactly what I'll be doing. You can head over to my YouTube channel, Simon Dixon, if you're interested in following along on that.
So let's just give Simon a bit of an on-ramp for that great message. So we've spoken quite a lot about today the fact that pensions probably, they used to be the place that people stuffed crap. When you have mutual funds that were competing on performance, the pensions that were far more opaque used to get all the bad decisions that fund managers made. And we've spoken even further that they have a disproportionate allocation of government-based debt and also corporate debt. On that note, I still moan about my puts on high yield debt that should have come deeply into the money until the Fed decided, no less, Simon, to backstop ETFs of junk debt. This is government getting involved in sorting up high yield debt from going bust, because they fear the contagion of that. And that just shows that there's such a shelf of debt that's just on the verge of becoming new high yield debt, and it is so large and vast and is not being downgraded. The system it's almost like the subprime and the rating agent narrative all over again. That should all be dumping down into those pensions and were held by pension funds that have mandates not to hold junk, who would then have to sell what was previously investment grade debt and would now have to sell it as junk debt. And there's such a shelf overhang of this that alone would precipitate a massive pension crisis. I've just pulled up the TLT chart just to on-ramp further on what you were saying about the need for pensions. And I actually think we've had a bit of a blow-off event with the COVID March shoot up here. And technically, we don't really like this. We think this TLT, which is essentially a treasury bond ETF, could in fact have a massive sell-off. This could be the beginning of some reversal structure for those that like a little bit of a chart. And now you've got Simon here, who's already ahead of the game and is saying, if you understand the value of Bitcoin, crypto generally, and you recognize this ecosystem and space is going to expand on a huge scale, how about setting up your retirement away from this rubbish that you're seeing on screen that could turn, for which there's a bottomless pit of supply, and economic policy of eventually supply does affect price will come to bear, even if the Fed choose to be the buyer of last resort. There's only so much of your own debt you can eat and monetize, versus potentially looking at what Simon is putting together here as a pensionable plan in the crypto space. So that's really cool. And to get there, they go to your website. Give us the details again, Simon.
Yeah, so this is something we'll be doing under banktothefuture.com. So that's where you can invest in equity or crypto companies. And in the coming months, we'll be putting a new tab on there called Retirement Plan B. But you can sign up at banktothefuture.com. And
And Bank to the Futures without the A, is it?
both work. We got both domains. That's an interesting story in itself because you have to have a banking license in order to have the A. And so one day we're actually making a series of applications right now to try and get back the A. I think that's going to be my final book. The bank stole my A, and I'm going to summarize that. If I, yeah.
So, okay, so both will work. So both will work, so that's fine. I just want to make sure that people don't miss you. Bank to the Future. You can engage with Simon and his plans and innovations in the pension and retirement space, in a space that I think is going to be devastated, by the way. Also, what he didn't mention but should possibly is there's an element of an inheritance planning potential in there as well, isn't there, in terms of passing on that which you've taken and worked really hard to earn to your heirs as well. Simon, do you want to have a word on that?
Yeah, so we're creating like a 7 week coaching program for those that want to build their retirement plan in this space. And part of the module is making sure that you get the tax right. A lot of people, the industry has changed so much that they might need to do a bit of tax planning to make sure they're getting that right. And then having a structure that you can actually pass on, which is actually a very difficult problem within the Bitcoin space. But we had to solve that for myself, so we're trying to help other people solve the same problem.
He's taking what he's really chopped his way through the jungle to learn, and he's scaling that so that you can follow in his footsteps without half the hacking. That's awesome. Simon Dixon, Bank to the Future. Thank you so much for coming on. Really enjoyed this. Go and find him on the details provided. We'll put it in the edit below as well. Simon, have a great day, and thanks for chatting to us.
Thanks, Francis.